If you're shopping for life insurance, the cheapest quote isn't always the right policy. In the next few minutes, I'll show you how to compare term, whole, and universal life, size your coverage, evaluate riders and conversion privileges, and avoid the most common mistakes so your policy actually fits your goals and budget. A term life policy is like renting an apartment. It is designed to provide protection for a set period, often 10, 20, or 30 years. Premiums are typically low, and there's no cash value. The death benefit is designed for temporary needs like supplementing your income or covering mortgage or college costs. Look for term policies with convertibility so you can switch to permanent coverage later without a new medical exam if needs change. Next up, whole life insurance. Think of it as buying a home instead of renting. Whole life combines lifelong coverage, as long as premiums are paid, with cash value that grows at a guaranteed rate specified in the policy, and premiums stay level. With participating policies, dividends may be paid, though they're not guaranteed. Universal life is permanent insurance with adjustable premiums and, within limits, an adjustable death benefit. One variation is indexed UL with cash value tied to market index performance and downside protection from market fluctuation through a minimum interest rate guarantee. While the policy's cash value may be affected by changes in the index, it does not directly participate in the stock market. Another variation is guaranteed UL geared mainly to the death benefit. Flexibility is powerful, but it requires active monitoring because fees and crediting rates affect long-term performance. When choosing between options, start with final expenses, which are around $8,300 for a funeral with a viewing and burial. Then add debts, income replacement, and future goals like college funding. Consider how long you want coverage relative to work years and longevity. The average U.S. life expectancy in 2023 was about 78.4 years. Recheck your coverage as life changes. If you buy term, check the conversion window, often age 65 to 70, what permanent products you can convert into, and whether new premiums are based on your current or original age. Don't focus on price alone. Limited features and financial strength of carriers matter. Avoid buying too little coverage just to win a low premium. And remember inflation. $500,000 today probably won't buy the same in 20 years. Finally, plan for what happens when term ends. Consider conversion or layering coverage to match long-term goals. Start now because waiting usually raises costs and health risks. Gather income, debts, and goals, compare term whole and universal side by side, ask how riders and taxes may apply, and work with a financial professional. Review regularly after major life changes. Visit westernsouthern.com to explore tools and quotes.